two big sectors that we're seeing at Calvert Impact Capital are one, renewable energy and environmental sustainability, and the other would be gender equity. With regard to the environment, people are really concerned about preserving our natural resources. And especially as we've seen some rollback in regulation from our government, as well as the US pulling out of the Paris Climate Agreement, I think there's more individuals and more corporations that really want to put their own capital behind preserving our environment. And then we've also seen a great deal of interest in gender equity. So really providing capital to organizations that are empowering women and girls, both in the US and in developing countries, because women are really strong stewards of capital. They usually reinvest the majority of their income into their families, just providing much stronger, cohesive economic systems within their own family and their communities. One of the things we're really passionate about is giving them access to clean energy. So they can either spend more time studying, they can just have access to the electricity that they need to go about their daily business. We've seen a few things in the past couple of years. One is there are more funds, more investment opportunities popping up, and there are a lot of organizations and funds that have a much stronger track record than they did a few years ago. So for us, Calvert Impact Capital, we've been in this space over 20 some years. We've seen organizations come to us decades ago asking for a loan of a couple $100,000. Now they're coming to us asking for much more capital, millions of dollars. Or they're starting new funds, second funds, third funds. So we're really seeing the opportunities for the investment growing and the organizations much stronger, scalable, sustainable. On the other hand, we're also seeing new investors come into this space. So you have family offices, foundations, insurance companies, many other institutional investors and retail investors who realize that their money has power, that whatever they're doing with their dollar stands for something. And people really want to contribute to improving society. So we have seen just an exorbitant amount of capital coming into the space and the need for capital growing. And we're trying to really be the matchmaker and help build the infrastructure for the impact investing space. Blended finance is this concept that to make a fund or an impact investment feasible is that it just requires capital from many different sources. So in many cases, you'll have a foundation or philanthropic capital or maybe a government entity provide first loss capital or real catalytic capital to de-risk a project. So they may absorb a certain amount of losses or guarantee a certain amount of a portfolio. And this really encourages other investors, oftentimes private capital, to come into the sector where they may not have looked before or thought it was too risky. So we're seeing a combination of governments, development financial institutions, philanthropic players, foundations, individuals, corporations, large banks, all trying to work together and figuring out how can they layer or stack different types of financing into a capital stack that works for everyone. And this blended finance is really important because if there are some players who can de-risk the capital stack, then that's more likely to attract private capital. And unfortunately, we just don't have enough capital from our government resources or our philanthropic resources to really do all of the work that impact investing needs to do. But with blended finance structures, you're able to de-risk a project and bring in more capital than you would have otherwise.